Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, how high interest rates took a bite out of new home building, and nuclear power is having a comeback. So what do we need to know? Plus, can Canada's Senate kill a bill that pits Quebec dairy farmers against everyone else? That's all ahead. First, for the week that was in business, time for the briefs. The purchasing power of some Canadians has been badly eroded by inflation, while others have seen their wealth increase in the same period. The findings by Canada's Parliamentary Budget Officer lays bare the difference between income earners who have been hurt by higher rates and rising costs and investors, those with disposable income to save, since stocks and other assets increased in value in the past 5 years. Workers at the Port of Montreal are back on the job, at least during regular business hours. But the Longshoremen's Union says there is an overtime strike underway indefinitely, working hours apparently being one of the contentious issues in ongoing mediation between management and the union. One of the world's largest miners, Rio Tinto, is hoping to snap up lithium assets, including a mine in Canada, with an offer to acquire Arcadium Lithium. Lithium is a key element in the development of clean technologies, especially batteries. Canada's oil sands is more firmly in Canadian hands after a deal by Canadian Natural Resources to purchase assets there from oil giant Chevron. The $8.8 billion deal is for Chevron's 20% stake in the Athabasca oil sands project and its 70% stake in the Duvernay shale. The CRTC gave Canada's big cell phone carriers less than a month to show that they're taking steps to lower international roaming fees, or it says it will launch a formal public hearing into the fees. The regulator also said the companies must address wholesale roaming rates paid to one another. Housing affordability improved slightly in the summer as interest rate cuts made housing costs as a share of income fall to 59.5% from 61%. The data from RBC show that despite improvements for homeowners, buyers continue to find it a struggle to afford a home. And those are your business briefs. One solution to home affordability is to increase supply. CMHC estimates Canada needs about 3.5 million new homes in the next 6 years on top of what we would normally build. But high interest rates cut housing starts by 30,000 last year. That's a 10 to 15% decline. Iorweth is Deputy Chief Economist at the Canada Mortgage and Housing Corporation. Thanks for being with us.
Good to be with you again.
So that higher rates had an impact on builders. We heard from them about that. Were you surprised at the size of the reduction in building?
To be frank, no. As you said, we've been hearing a lot about it, and we were anticipating it, to be honest, to be a little bit earlier, but builders and developers have held in there. So we weren't totally surprised by the magnitude, and we were a little bit concerned that there's more to come.
And on that front, because we've got modest rate relief so far, we don't know how quickly we may get even lower. What do you think the impact will be of what we've seen, and how low does it need to go? Do we have any way of knowing to get the building happening again?
Well, that's a very difficult call because there's a lot of different moving parts at the moment. Certainly interest rates are coming down. But we certainly need to take action on other regulatory measures, regulatory costs as well, try and establish renewed economic growth. And so there's a lot of factors going on here, and we're a little bit concerned that there's a lot of investment moving away from new construction at the moment.
And what, in your view, is there a quick way to fix that? Development cost charges, they're one place that you hear a lot of people talk about. Reductions would be useful. Are you seeing anything that suggests some good work is being done on some of the things that are impediments to building?
Well, certainly the federal government is taking action. There are measures there to promote rental construction. There are a whole slew of and various acronyms of construction programs. The federal government is also trying to help through the Housing Accelerator Fund, just to incent municipalities to reduce some of those fees. So we really need to take more action at that local level to speed up processes and to try and keep those development charges in check.
I guess the other kind of interesting dance as rates come down, making the borrowing to buy a house more affordable. We may also see prices rise as more buyers come back into the market. We don't know quite how that will shake out. It won't necessarily be one-to-one, but are you worried about that the affordability picture won't necessarily improve?
Well, and it's even more than that. Our concern is that there's a real supply shortfall right now. We believe that condos construction is really struggling. So, condo on the demand side, there is weakness right now, but there's also weakness on the supply side right now. So our concern is in a year or two, interest rates will have come down, economic growth will have renewed. And at that time, we'll see demand for housing going up, but the supply won't be there. And we're back into this boom time of higher house prices and lower affordability. So we're really quite concerned about the shortfall in supply right now.
Which, of course, you noted, there are lots of government efforts here. But right back to CMHC's roots, is there a place here for even more direct support of supply, building by government in this country?
Well, short answer, yes, but getting all of that funds from the government is we don't have the scale, frankly, to deal with it. Our best estimate at the moment is that the stock of social and affordable housing is around 4% of the total housing system in Canada. Even doubling that, if we had the money, you're still talking 8%. And that's a very small part of the housing system and will not help the vast majority of the middle class in Canada. So clearly, the government will have to help, but it's the private sector that will have to get the funds together to increase supply. And by the private sector, I mean individual investors, large pension funds, funds from private equity, the stock market, all of them, because we have a drastic shortage of supply.
Great to have you with us. Appreciate your time.
Thank you.
Iorweth is Deputy Chief Economist at Canada Mortgage and Housing Corporation. Coming up, nuclear power is back in vogue as a way to power our growing needs. We'll take a closer look.